Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of stock index futures. I'll start with UK FTSE futures. A third consecutive indecisive pattern on Friday. This time was a spinning top. I've recently repeatedly mentioned how it seems there are a lot of contradictory and odd forces at play here, even if the trend seems to be gently higher. This was just another example of it. Overhead we still have the upper time resistance, currently 70.70 of the broken but still seemingly effective December 2020 to late January 2021 bullish shift pitchfork. Meanwhile below we have some light yet adequate support from the gently rising short moving average, currently 70.17. Though the better support would be from the top of the old broken wedge pattern, currently at 69.71. Further below we have the January high at 69.10, as well as the rising short medium moving average currently at 68.86, and its partner, the uptrend, currently at 68.53, which also made up the lower trend line of the old January to March sideways triangle. Meanwhile further overhead we have the May high at 71.43, next to the lesser projected Fibonacci level at 71.42, and with the 50% projected Fibonacci level a little higher at 72.14. So far today, a higher opening and a really interesting overall move higher. Enough of a move that we are currently looking at a big key reversal up today. I suppose that ought not to be too surprising after all the small indecisive patterns we've recently endured. Anyway, closing tonight over 70.25 and we'd be on. German DAX futures. A bearish engulfing pattern yesterday, seemingly another reaction move based on the proximity overhead of the important 50% projected Fibonacci line at 15.629. This 50% projected Fibonacci line has capped this market, well, since mid-April. The recent overall move higher was, as have all the moves up in May, originated from the compound weekly key reversal up made in the first 2 weeks of May. The last few days have been the latest pullback lower from the testing of this 50% Fibonacci line, the original testing which happened as far back as mid-April. Anyway, below we still have the rising short medium moving average, currently 15.170, and its partner, the late October 2021 to date uptrend, currently at 15.138. I also have a possible small rising wedge pattern for the action throughout May, now going into June, for which the recent action is reasonably well captured within. That's currently 15.286 to 15.657. I'm still pondering on this one before I open my mouth and put my foot in it. One final point, the market looks set to try down into the previously highlighted mild congestion between 15,400 and 15,440, but it stopped short of doing so. Anyway, looking ahead, the potential is still there for a try higher, possibly towards target X1 in the 15,800 area, a more recent topside target with a small diamond continuation pattern. However, in between there's a lot of things in the way. So far today, an immediate reactionary bullish white Mariposa, almost day 2 in a 2-day bullish above the stomach pattern. I suspect the congestion at 15,400 and 15,440, which I mentioned earlier, that's below, may have contributed to this. However, the market has some incentive behind it, as it has punched up through the 50% projected Fibonacci line overhead at 15.629, finally, and is testing the upper trend line, currently 15.657 of the recent rising wedge pattern. US E-mini S&P futures. A possible day 2 in a 2-day bullish above the stomach pattern on Friday, despite it being a bearish black crow. Not the most suitable of follow-ons to the previous session's key reversal up. It was nevertheless a further cementing of the market back up within the December 2020 to early February 2021 bullish Andrews pitchfork, specifically over the lower time, currently at 42.04. Interestingly, the market opened over the 100% projected Fibonacci level at 42.02 and closed right on it. However, as I repeatedly said last week, you do not go around creating key reversals up. 2 within the last week, back up over the lower tine unless, as I suspect, something is behind it. So far today, an open just over the lower tine, followed by a dip down through the 100% projected Fibonacci level before a halt at the short moving average below it, currently 41.91, and a smart about face and rally higher through last week's high and approaching the all-time high at 42.38. As I said last week, it may seem insignificant given the narrow ranges we've had in recent days, but sometimes the greatest movements start from the smallest of things. I'd ask you to remember that when I pointed out the key reversal up last Thursday. French CAC 40 futures. A reactionary move back down off the overhead projected 50% Fibonacci line at 64.80 and looking like an inverted hammer, but actually being a wannabe key reversal that didn't quite make it, ending up as an outside day. That was Friday. It was still a new all-time high and was still well within the recent broken shift pitch walk in between the lower tine, currently at 64.20, and the middle tine, currently 65.52. All this action is in the frame of last week's, or let me rephrase that, 2 weeks ago, weekly key reversal up. The next obstacle on the upside is still the most recent 50% projected Fibonacci line at 64.80. So far today, a higher open with another new all-time high. That's currently over the 50% projected Fibonacci line at 64.80 and scanning fresh new territory. It also looks like a day 2 in a 2-day bear bullish separating lines pattern. It seems a weekly key reversal up made, as said, from 3 weeks ago, continues to influence this market. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.